Welcome, everyone, and thank you for joining us today. My name is Maylise, and I'm the Managing Director for the Catalyst Fund. It's really great to see so many of you can make it. I think there's over 80, almost 100 actually now. I'm seeing people in the room, and I see some familiar names. So thank you for making the time. I'm very excited to welcome you to inaugurate the launch of the Catalyst Fund Inclusive Digital Commerce Accelerator alongside our partners Mastercard Foundation and MEST. 5 years after the creation of Catalyst Fund, this really marks our first expansion. Following the success of our flagship fintech program that was created and scaled with support from our incredible partners, the Bill and Melinda Gates Foundation, JP Morgan Chase, and the UK government. And we're super happy today to welcome Mastercard Foundation as well as our new funding partner. Catalyst Fund mission, for those of you that are less familiar with us, is to support tech innovators who are building affordable, accessible, and appropriate tech solutions that improve the lives of underserved communities and micro and small enterprises in emerging markets. I think it really goes without saying that African MSMEs are the leading contributors to employment and GDP across the continent, and actually the beating heart in many other economies as well around the world. And in Ghana, informal micro and small enterprises specifically make up 92% of all businesses and are concentrated in the informal sector. Typically, they're operated by youth and women, and opportunities for formal employment for these segments are limited. So the informal businesses is what prevails. And tragically, these are the businesses that have been hit the hardest by the COVID-19 crisis. And worldwide, the pandemic has threatened the livelihoods of, I think, over 1.6 billion informal workers. And in Ghana, over 90% of micro enterprises actually report decreased sales. They've been forced to shut down. They could not operate digitally, and they've really put hard-earned livelihoods at risk. And a BFA, in contrast, would actually run some research in countries like China and found that MSEs who were operating digitally there through and after the pandemic actually fared better. They could access needed financial services to continue to operate and weather the storm. They can continue to operate online. And overall, we're just more resilient to a pandemic like COVID-19. So recognizing the crucial role that technology can play in enabling these businesses to recover from the pandemic and build resilience for the future, we created the Inclusive Digital Commerce Accelerator. Through this program, we really have one main goal. We aim to improve the financial resilience of informal MSEs through and after the pandemic by scaling companies that can enable them to leverage digital commerce. So over the next 2 years, we'll work with 6 growing digital commerce companies in Ghana to scale their ability to reach informal MSEs. And in parallel, we will also work to foster partnerships and coordination across the value chain to accelerate the overall digital commerce ecosystem, because we obviously recognize that we can't do this alone. And to do so, we look forward to build upon the lessons learned from the last 5 years, leveraging our knowledge in fintech, e-commerce, and venture acceleration, particularly because we see that embedded finance strategy, so the ability to take financial services and embedding them into other platforms, especially in this case, is really critical to powering the adoption and the expansion of digital commerce solutions across Africa, and one doesn't go without the other. Companies selected for this accelerator will receive flexible grant capital, bespoke venture acceleration support from BFA, and our industry experts and our venture builders, and local support from MEST, our partner, and connections with ecosystem players across the value chain. And my colleague Matt actually will tell you a little bit more about the criteria and what companies get later into the event. So without further ado, we're really thrilled to be partnering with Mastercard Foundation and MEST to make this happen and combine the knowledge of our 3 organizations, and hopefully many more of you are in the room today, to foster a more inclusive digital commerce ecosystem for all Ghanaians. So next, I'd like to introduce Ashwin, Managing Director and Country Manager at MEST Africa.
Thank you, Miles, and I think welcome everyone. Good morning, good afternoon, and good evening. This is a statement said by a lot of, I think, our MEST staff, and I'm glad I can say that to you as well. MEST is an organization which has existed in Ghana and particularly in Africa for the last 12 years. In the course of our last 12 years, we've managed to work with early stage entrepreneurs in first identifying them, recruiting them, training them, funding them, and finally growing them. So as part of the entire value chain, at the earlier part of last year in 2019, we decided to engage with Mastercard Foundation in designing 3 programs: Pre-MEST, MEST Express, and MEST Scale. After welcoming Mastercard Foundation into our family early this year, I think we had a unique opportunity to work with an organization such as BFA and the Catalyst Fund on working on a project such as this. The project actually came about with a lot of on-ground insights of actually seeing what was happening in the local economy, while most of us were here actually seeing what was happening to informal traders and informal retailers as well. And personally, this is one of the biggest accelerators which is going to be run across Ghana, and we're very excited to support it. The Inclusive Digital Commerce Accelerator has been purely designed to, one, yes, support MSMEs, and also support, I think, informal retailers, but also focus on digital commerce companies and actually scaling them as well. I think MEST at this particular point in time is actually extremely grateful to both, I think, Mastercard Foundation and BFA to making sure this relationship will work and we'll be able to do incredible work. That being said, would love to invite Natalie on now to actually say a few words regarding the synergy and also talk about Young Africa Works as well. Over to you, Natalie.
Thank you, Ashwin. And the leadership team from BFA, Catalyst Funds, and MEST, our partner on this program, all participants online. Ladies and gentlemen, I bring you a really warm greeting from everyone at the Mastercard Foundation. We are delighted to join you all today for the launch of the Catalyst Funds Digital Commerce Accelerator. It is a very important initiative for us. And when we announced the COVID-19 Recovery and Resilience Plan of the Foundation in April earlier this year, our aim was really to enable communities and institutions in country where we operate to withstand and respond to the short-term impact of the pandemic, while strengthening their resilience to addressing emergencies such as support to health workers, first responder, and students. So the COVID Recovery and Resilience Plan is committed to scale up initiatives that will also mitigate not only the immediate shocks of the pandemics, but also lay the groundwork for economic recovery in the long run. And this is where we see the relevance of such initiative like the one we're launching today. To enable us to accomplish this objective, we needed partnership that were aligned to expand access to financial service for micro and small MSME, but also to support the digitalization of their operation, enabling them to scale and expand rapidly. So when we started the partnership conversation with BFA and MEST a few months ago, the team really started to reflect on the future of Ghana MSME sector and how we could support the buildup of resilience in the long run. They consulted widely. The opportunities that technology had to offer quickly became an evidence. And knowing very well that economies with widespread access to digital platform and market space have far better than those without this level of connectivity, we figured out that the best way to secure the future of the MSME in the country is to provide a homegrown approach to digitization that is easy to adopt, open up new market opportunity, and offer opportunity for scale. So the Catalyst Fund Digital Commerce Accelerator program is really an initiative of importance for us. And the 4 million Catalyst funds will enable MSME, that this is really the strong belief behind this initiative, to leverage digital channel and to scale. The starting point of this, as it was mentioned earlier, is the selection through a competitive program, which will select 6 promising digital commerce companies, provide funding, mentorship, and advisory support to enable them to scale. It is important to remind us at this point that the importance of MSME sector to the Ghanaian economy. MSME are really the biggest contributor to employment. Today, they employ over 80% of the productive population and mostly young people that are in the heart of Young Africa Works for the foundation. With the right structure and opportunity to scale, the sector will become the single biggest contributor to the Ghanaian economy. I would like to conclude with those words. At the Mastercard Foundation, listening and learning are core values to us. We are big believers in co-creating solutions that have both immediate and long-term impact in community and institution. That's why I am so excited that the Digital Commerce Accelerator program is taking off today to enable our youth enterprise to digitize, to scale, and to strive. I want to take this opportunity to commend our partners, BFA and MEST, for commencing this journey with us. Because for us, it's only the beginning of a long journey and model that could be replicated across Africa. I also want to say well done to my colleague at Mastercard Foundation for working and co-designing this program with our partner. The outcome we all seek is a thriving MSME sector and a digital ecosystem that supports the growth and builds the resilience of a sector now and in the future. And we can do it together. Thank you again.
Thank you so much, Natalie. It's wonderful to have you here today, and we appreciated your words. This is truly an aligned partnership that we believe will power our shared mission for tech to be transformative for the underserved, the informal sector, women, and youths. So thank you to Mastercard Foundation and to MEST for the partnership. Okay, I'd now like to welcome a very special guest moving into our fireside chat. We'll hear his compelling story of digital commerce, a story with a very long and continued arc. Today we have Alex Bram, co-founder and CEO of Hubtel for our fireside chat. And we have had a last-minute change, but I'm especially delighted to invite CEO of BFA Global, Amalo Nweno, to interview Alex. Alex and Amalo.
Hi, everyone. And welcome to this really exciting launch of the Catalyst Fund program in Ghana. I will just pick up on a few words that Natalie had mentioned as I start to interview Alex. This is a fireside chat, so it'll be conversational. And we hope to have interesting comments and feedback. And I think if you have things you'd like to discuss, you could add them in the chat and we might get there. So Alex, welcome. I think Natalie mentioned the thriving digital commerce ecosystem in Ghana, which is part of what we want to support and build in the Catalyst Fund. But you are the example of a company that has grown and thrived in the Ghana environment. And I think it's been a long and interesting journey. I wonder if you could just take us through a few of the highlights and lowlights that have gotten you to where you are now, perhaps starting at the end. For those who don't know you, what is Hubtel? What do you do? And how did you get where you are? And I will ask you questions along the way. So please go ahead and introduce yourself.
Oh, okay. So Hubtel is currently very neck deep into the retail space. We're helping businesses move from traditional retail that's happening in their stores to take this online. So we're taking e-commerce from a different perspective because we started off, and I'll come to, our story of how we ended up here is all in the story that I'll share about from our founding to what got us here. But we currently help businesses with what we call a shopitality platform. So it's basically helping the business sell in their physical space and move from the physical space, move that same experience that they have from in the physical space into a digital realm. So our idea of e-commerce starts from small businesses that have shops, that have points of service or points of sale, to large businesses that also have distribution points. And we take this online to create a similar experience so customers can continue to interacting with the business along. We think this is an effective approach to solving that e-commerce problem or digital commerce problem in Africa. How we got here is it's been 15 years. We started.
That's a long time in digital commerce world. So you were one of the pioneers.
Yes, you could say yes. We were very much one of the very early movers into this space in Ghana. But we didn't start as a digital commerce company. We started as a bulk SMS company. So sometime in 2003, I was in university with my roommate, and text messaging had just started becoming available on the networks. And I remember the first time I got a text message, I said to myself, gosh, this should be for businesses. This shouldn't even be for peer-to-peer messaging. And
So have you been serving businesses ever since?
Yes. So some light bulbs started going on that, wow, this is like someone should do this as a business. 2004 came, no one did it as a business. 2005 came, no one did it. So on our very last day of school, we literally were like jogging behind the finish line. The moment they rang the bell, you're out of school. We took up everything we could, organized it. We called the company SMS Ghana. We started building solutions to help businesses communicate quickly. So our first customers were airline or businesses that dealt more with travelers that needed to be informed quickly. Then we quickly translated into retail space. Then we did insurance space. Then we went into banking space. We were the first to pioneer transactional alerts in Ghana, insurance alerts, so many of these alerts that changed. It was a lot for a lot of the businesses. It was their first foray into the digital space. It came to a time
and how
about.
No, I was wondering, since you held their hand in their first foray into a very basic digital interaction, how has that influenced what you're doing now? How did you decide to go into the e-commerce or retail side of the digital commerce business? And what did you learn from those early days that you're still carrying on today?
Yeah, in fact, everything we're doing today is everything that we learned from what businesses were doing. When we started in 2010, we were growing aggressively between 2005 to 2010. Sometime in 2010, we got our first signals that we're starting to tank. Our growth was starting to plateau a little bit. So we started looking into, okay, what else can we do to help these businesses on our platform? And in analyzing a lot of the traffic that we were processing for the businesses, we noticed that literally over 90% of the traffic that we were processing from a large chunk of the businesses were retail related messages. So customers trying to send a text message to tell their consumers or their customers that we have new stock, something is up to date, you have to pay us, reminding them of or wishing them well, generally carrying sales related information. So we started saying, okay, let's follow this up. Maybe we need to start building something that will help us increase our conversation and eventually our transactions that we have with these retailers. So we started building a POS system that could send SMS receipts from in-store. Then we started tinkering with a POS, a point of sale device itself. Then this was way before mobile money even launched. We started playing with POSs. We started playing with payment systems. just to unearth what was there.
So,
And so everything that
and now
we
that
are right
mobile,
now, everything that we found.
right. Yeah, I was asking about mobile money, which you mentioned, and I know it's very prevalent in Ghana. But has it been successful at the retail store point? In your world, are people paying with mobile money, and is that something that's enabling digital commerce?
I must say it is a growing market. It's growing aggressively now. Mobile money didn't start off as a retail product. So mobile money started more as a problem to fix money transfer. So before mobile money, a lot of people who are familiar with the culture in Ghana is that if you needed to send money, you would go to a bus station, pay money to the driver, and then trust that the driver will send it to the next city or the next town that they are heading to, and then your contact will meet the driver somewhere and identify themselves, and then the driver would pass over the money. With time, that got a bit developed by some of the bus companies. The post office company also hopped onto it and developed a more formal system of money transfer. So when the telcos came in, there was a strong demand for mobile money already for transfer. And the earlier adverts that we all would hear would be around one of the biggest providers, being MTN. They ran adverts where people were so excited that they have just received money directly from a contact of theirs without having to go through several intermediaries. So that problem was a huge problem, and it literally solved it. But then we started realizing naturally that once that problem is solved and people are able to see that, wow, okay, I can send money um, uh, remotely without having to go through several channels, and it can be direct, then now a lot more ideas started popping up. But yes, if you look at the evolution of digital commerce in Ghana, it started for me and for all the experience that we had and the struggles and challenges we had in the past trying to develop digital commerce. It started with first of all, mobile penetration being very high, the cost of
Yeah.
mobile phones dropping, the cost of coming onto a network dropping. Earlier in Ghana, to get a SIM on a network, we all know, I think the case is the same across many African countries. It was quite expensive, but we saw the cost come down significantly. That also sort of grew the adoption for mobile phones very quickly. Then the penetration of value-added services, people realizing that beyond phone calls, you can also do SMS and do USSD and interact with certain systems to transact and push money around. That was also key. But there were still some significant challenges like IDs and other things.
So where you are now with your the sellers on your marketplace, do you find that it's easy for them to get on your marketplace and start selling, or in fact is it still quite a journey with many of those digital infrastructure not yet in place?
I think a lot of the digital infrastructure it's currently in place. What is missing now is a little bit of innovation. It's for companies like
But
us to
you're a leader in that innovation area.
Yes, that's what we're trying to. We're trying to be the leader in that space, and we have a strong lead in that space because of the kind of history that we have. But this is where innovation needs to bridge the gap, because we're looking at, I mean, everything that we need to make digital commerce happen in Ghana are there. All the ingredients that was not there 10 years ago are there. I mean, talking about the smartphone, the price of smartphone is no longer a barrier. The cost of internet is no longer a barrier. uh, People's ease of use of tech products like with the WhatsApp and the Twitter and some of the big apps coming from Silicon Valley and outside Ghana have also influenced people's ability to access technology. We fixed the location problem somewhat. If all else fails, GPS works very fine. We have our own national digital addressing system here in Ghana. Someone can give you a little, a few digits, and you can actually point to their specific location. We have several fintech apps that have also opened up several APIs. Then there's a massive proliferation of logistics, delivery logistics, and there's I don't even know how many people that industry is employing, but it's growing aggressively. During the recent lockdown, COVID pandemic lockdown, the government was kind enough to allow e-commerce companies and delivery companies to continue to operate, and it was all over the place. That's what was driving a good part of our retail economy going. So I would
So
say that.
did you sorry, at Hubtel, did you see a big uptick in business because of COVID?
Oh, yes, yes, we did. In fact, COVID more than quadrupled
Wow.
our delivery and activity, everything on our website relating to retail. Because all of a
Wow.
sudden,
That's really
it was like, yeah, I mean, in fact, it was like this company has been trying to tell businesses that, hey, we're trying to go digital. Digital is the future, is the future. And many are like, yeah, okay, yeah, we hear you, looks nice. But then COVID came in like, Alex, that thing you were telling us about, like, can we start it now?
right.
So it was
Yeah, well
great.
that's very
Retailers.
go ahead. Yeah.
And not just
Now I was just
retailers,
saying that
for consumers as well. We saw a lot of activity from consumers on our website, coming on, trying their first orders. We got a lot of first-time orders on our website, mostly for
wow.
food, but also for
Okay.
essential
I noticed
household.
when I went to your website that you have a lot of food on your front page. So a lot of first-time buyers are testing out buying food, are they?
Yes, that's correct.
That's a big logistics challenge, though, delivering fresh food.
Actually not. So even for a company, like for our business model, we don't own the logistics. We don't own the physical aspect within the delivery chain.
Right.
We onboard a delivery rider who comes with their motorbike. We assess them, give them some a minimum amount of training, give them our ground rules, make sure they are insured, and we brand them out, and they're ready to go. They sit somewhere. They sit in often in a particular locality. The moment an order is completed by a customer, they would get a notification on their phone. They look at the order, they look at where they are going to pick it up and where they are dropping it. They accept it, and also it shows how much they will earn. They accept it, they go pick it up. We've given them these packs that is able to keep food fresh and is able to keep certain
Okay.
items
Yeah.
fresh. We work with retailers on all the in-betweens, so things that will boost trust, like returns, free returns, and whatnot. So they pick it up, send it straight to the consumer. Throughout the whole chain, the consumer is notified of the progress. At the end of it, the consumer gets a code. Once the rider shows up and the consumer inspects it and they're okay with it, they give the code to the rider. The rider inputs it, gets paid, and the transaction is completed. If there are any other thing after that, it can be managed also from the app, like returns and what, which we don't get as much of, to be honest with. It's almost negligible. So that's literally how we do. It's very easy for us to find the delivery riders. They are all over the place. It's unfortunate we can't take on more than we can accommodate in terms of the delivery demand that we get. So we try to manage the size, but it's very much available.
So as you said, it sounds like the delivery industry is employing a lot of people who presumably were not previously, and that kind of dependable employment. Are you also seeing that the sellers on your platform are expanding their businesses and employing more people to work in their businesses?
Yes, we are seeing that. We are seeing that strong uptake. In fact, for many of our retailers, I mean, the story on our platform was somewhat a little bit flat just before COVID. We dipped for the first week about 40 to 60% for many of them, and then we just saw a strong uptake right after that. So I would say many of the retailers are on our platform are doing twice what they were doing just before COVID.
So it sounds like this is a very opportune moment for the Catalyst Fund to launch the Inclusive Digital Commerce Accelerator. It sounds like you have a lot of the digital infrastructure in place and demand is starting to pick up. What are some of the challenges that are still ahead of the digital commerce sector?
I think one of the biggest challenge for hardcore digital services, I mean, services that you can pay and the service is delivered instantly. I would say the biggest challenge there is cybersecurity, fraud issues, people not being what they say they are. And for that, you've got to keep a 24/7 eye out. You've got to invest in the systems that will ensure that you're consistently monitoring. But I see that as a challenge for startups, because when you're starting up and you don't have that experience and that expertise and that amount of capital to deploy towards investing in these things, it's going to be a huge drawback when, you know, fraudsters hit your systems, or people. There are just quite a number of bad people on the internet, as we all know. So I see that as a huge challenge. Another challenge that I foresee is innovation not catching up fast enough to be able to organize the market at the scale that we need to organize the market. And I say that because, I mean, I see a lot of businesses are improvising in several ways and are innovating in using different tools, approaches, and methods to get their delivery going. If innovation doesn't catch up quickly, too many of them might tire out and give up and not have the opportunity to grow their business to take advantage of this boom. So innovation has to also catch up a bit to help the really small businesses organize because I mean, to do digital commerce is quite hard. It is quite hard. To do serious digital business. It is quite hard. It can be quite a lot for especially the micro and the small businesses. So many just tend to shy away and they say, you know what, you come to my shop and just come and give me good old cash and take the thing away. So I feel if innovation doesn't catch up across the continent, we might get some more businesses just literally giving up on this new push.
I wonder because, you know, like you mentioned, there's been this huge increase lately with COVID, and people will build up new habits and new skills, I expect. Maybe I'd just, as a closing question, ask you what you came up presumably with very little support from accelerators and investors. Would you say something about maybe advice to us and the Catalyst Fund in terms of what do businesses need that can help them to accelerate and propel them into that digital commerce in a solid and inclusive manner?
I would say the startups need to have, first of all, they need to be very innovative. They need to have what it takes to be able to move quickly. So the skill set that's needed, a bit of capital that is needed, the technical knowledge and the knowledge that they need to have in taking advantage of whatever ideas that they come up with. I think that's the biggest obstacle. Times have changed so much. I mean, when we started, the market was more forgiving. I mean, so we didn't need to raise so much cash. So Hubtel has never raised a penny outside of the company from any investors or even a fund or a grant or anything. We bootstrapped from day one, and we've been profitable from year one because
Wow, that's excellent.
the period allowed us to do that. When we started, entrepreneurship was not, the buzzword. Everybody would say, "Go look for a job," and it was okay. Jobs were fairly okay to, or quite easy to find then, and so that allowed us, without much competition, to move quickly and capture the market, grow the market, pushing new ideas, generate as much revenue. And we're smart enough to also reinvest a lot of that money back into the business and back into the business until we got to a size that we didn't really need to raise money externally. But I think times have changed. We can't say the same for startups that are coming up now. They would need a bit more support in terms of enhancing their skill set. They would need perhaps a bit of technical know-how, a bit of cash to help drive their businesses that are going to take advantage of digital commerce.
Great. Well, I think that's a big challenge to the next generation of entrepreneurs. But this has been a really inspiring journey, and your experience, I think, it's an inspiration to others who are following behind. And we're expecting to work closely with you in the Catalyst Fund and see you and your whole industry, not just your particular company, but the whole industry grow with our support. So thank you very much, and I'll hand back to Jane for the next point on the agenda.
Thank you.
Thank you, Amalo and Alex. That was really inspiring and also eye-opening to understand how you got to here today. So I just want to thank you for providing us with a foundation and laying out the emerging potential for digital commerce and its evolving story in Ghana. Now I'd like to welcome 4 panelists today to join the discussion that I'll be moderating on what it'll take for digital commerce to be transformative for the informal sector in Ghana. I'd like to welcome Clarence Blay from Bank of Ghana, Albert Biga from Zuba Shop, and Lexi Novitsky from Acuity Venture Partners, and Kweku Fleming from MEST Africa on the panel that I'll be moderating. So if the panelists can all show their videos, we can all see you. Great. I don't think we have Albert on the line. Is that right?
Hey, I'm here. Did you say, what did you say?
I was just trying to make sure you were on the line. I couldn't see your video. If you're able to also present yourself.
Yes, I'm online. Yes, I'm online.
Okay. Great, thank you. So before we get started, I would love to hear from each one of the panelists with a brief intro about yourself, 30 seconds, starting with you, Kweku.
Hi, it's such a pleasure to join this panel. My name is Kweku Fleming. I've been working in the entrepreneurial space in Ghana for the last about 15 years. And I'm really excited to be a part of MEST Scale as a scale manager, as MEST begins to broaden its scope to focus on later stage companies. And I'm also looking forward to this panel right now.
Thank you, Kweku. How about you, Lexi?
Hi, everybody. My name is Lexi Navitsi. I live in Lagos, but I'm joining you from the US right now. We're all watching the elections very closely, so maybe we'll even get some updates during this conference. I have been an early stage investor across Sub-Saharan Africa for several years now, initially with Singularity Investments, which we transitioned into Acuity Venture Partners with a very similar sort of strategy. So we're focused on Nigeria and Ghana, mostly backing pre-seed and seed stage companies and following on through the growth stages, and very heavily focused on digital commerce as a sector, but also verticals around that, including financial inclusion, inventory and supply chain management, logistics, and soft infrastructure. So very happy to be here on this panel.
Terrific, thank you. Albert, thanks for putting on your video as well. It's great to see you.
Good to see you all too. It's my turn, right?
Yes.
Yeah, so my name is Albert Bigger. I'm CEO of Zubershop. So recently as well, I've been involved in a lot of projects in the startup sort of ecosystem. And my interest is largely twofold. One of wanting to mentor younger businesses into operating better. And secondly, because a group of business school friends and I have just set up a fund and businesses to invest in. So that's my interest in the space. Yeah, my background is in software design and implementation. Yeah, that would be me. I don't know if you have any questions.
Great, thank you. And finally, Clarence.
Well, I guess the regulator speaks last. I'm Clarence Blay of the Bank of Ghana. For the past 15 years, I've been working with the bank in the area of policy, oversight, and risk management in relation to payment systems, more closely to the development of an electronic payment system environment that will support digitization of the Ghanaian economy. In recent years, I would say for the past 5 years, a member of the Payment Systems Department, we've been working with a more focus on the non-traditional player. I mean fintechs and other non-bank entities that are leveraging technology to enhance access to financial service within the Ghanaian financial service industry. And this year, April, with the establishment of the Fintech Innovation Office of the bank, I have joined that office, now fostering fintech growth as a way of ensuring that there are innovative financial services available to every segment of society, particularly the unbanked and underserved, as a way of enhancing access to financial service and also promoting digitization of the economy. So I find this forum timely as it ties in with the progress and the programs of the central bank, as well as the national agenda for digitization. And I hope to contribute my bit and also listen to the panelists as we forge a common goal towards digitization of the Ghanaian economy. Thank you.
Thank you, Clarence. I actually had selected you in Kweku to start and end because all the blue I was seeing on the screen, and I thought that was very nice, and I didn't get the memo. I should have also contributed, but thanks everyone for that. Okay, so I thought what we could do is get started with some agree and disagree statements to situate ourselves with the different perspectives that you bring as panelists, but also to engage the audience. We have a wonderful 119 participants, not including ourselves. So I think that's wonderful that we have such a great audience, a great group here. And so let me distribute this poll to get your feelings, your thoughts on the following statement. Do you agree, disagree, or unsure? Here we go. I'm launching the poll. Ghana is an attractive market for scaling digital commerce compared to some of the better known markets, South Africa, Nigeria, and Kenya. And so while we're waiting to get the responses from the audience, I'd love to hear what the panelists' reactions are to this statement.
Maybe I'll jump in really briefly. Obviously, since Ghana is one of our core markets of focus, we do think that it's a very attractive market for tech solutions in general. In particular, to digital commerce, certainly an attractive market. Across Africa, one of the best ranked countries in terms of ease of doing business, a super young, tech savvy population, and I think a growing middle class as well as, you know, an SME culture really driving a lot of trade and commerce.
Yeah, I would also add, and I agree, of course, because Ghana is an amazing place and a great culture. So though its market is smaller than the giant of Nigeria and of course South Africa's economy and Kenya's, it has become a gateway into Africa and the gateway into West Africa as well. And so for that reason, I think it's an attractive place to build businesses and gain a global stage.
So my take on this might be from a slightly different perspective. And if one understands why we had previously low e-commerce and digital investment in Africa, you'll understand why Ghana is uniquely placed. Some of the main reasons were low income levels, poor infrastructure, political and economic instability, and then absence of online payment solutions. Ghana consistently has a middle class that's growing in double digits. Infrastructure is growing for political and economic stability. I guess the record speaks for itself. And I think I'd probably add one more thing. I remember when I used to work back at Intel, one of the reasons why we got a lot of proof of concept happening in Ghana was that they would say that Ghana is small and structured enough, but big enough as a test bed to really be able to judge whether something will scale properly or not. Obviously, Nigeria is the biggest market, but its chaotic nature makes it a very difficult market to operate from. And then lastly, I mean, if you consider the fact that when you talk the digital space, borders don't really mean anything, then really you're looking for basically a home or a base for whatever it is that you're doing. And as one of the panelists said, ease of doing business then becomes a major factor for considering the market. So yes, I would.
Great, thanks for sharing the perspectives.
I will come in.
Given the time.
I will come in from a central banker's perspective. I agree largely with everything that the earlier panelists have said about Ghana, and I'll also add that this is one of the countries on the continent that the central bank is playing an active developmental role within the fintech space. And this is evidenced by our payment system strategy that is out there. Our Payment Systems and Service Act that has explicit provisions targeting fintechs to support this development that we have focused on. You can also see from the licensing application pack providing a tiered licensing category with a standard license for entities that do not require any minimum capital except the minimum fees, and also our preparedness to provide a sandbox within the central bank environment, not only for regulation, but for innovation. It means we're going beyond stability, and we think that the ordinary approach to stability, which looks more to regulations, and also thinking about innovative solutions that are safe and secure, sustainable, and also promote inclusive financial sector, a way of dwindling the shadow economy so that we enhance the overall stability of the space in a positive direction. And this active role of the central bank is a plus that we should all look at.
Thank you. We actually have Nishan asking how much the central bank looks to other countries, other initiatives to promote lower transfer costs, such as UPI in India.
Can you please come again?
Yes, we have a attendee asking how much the central bank looks to initiatives in other countries to promote lower transfer costs, such as the UPI in India.
What we are doing currently is that traditionally, when it comes to remittance, it is the banks and the international money transfer operators that play in the space. We recognize the importance of reducing the cost of remittance, and we have provided opportunity for enhanced payment service providers to be able to sign agreement contract with international money transfer operators, those that are not the traditional ones. And we have seen this happening. And the remittances are increasingly being received on people's mobile phone using digital channels. And it has reduced significantly the transaction costs involved in receiving remittances and the cost of even trekking to the banks with all the risks associated with it. And that is one area that the central bank is promoting actively. So we have a number of fintechs that are looking to that area. And I can say that I don't want to mention names as a central bank. We have to be neutral, but quite a number of entities are going to that area. We're seeing interest in remittance hubs and all the other devices that some entities are rolling out to make sure that people sit in the comfort of their homes and send funds seamlessly to Ghana, to people's mobile app. And I also want to say that this is also in line with a bigger project being pursued on the African continent by the African Remittance Institute, which is based in Nairobi, Kenya. And we are an active participant, and we are doing a lot in that area by contributing to some of the ideas, as well as conducting research in this country as to how best we can reduce the cost of remittance. So we are using the novel channels, new entities with the new channels, which promise a lower cost of remittances, and we are solidly behind this agenda.
Excellent, thank you. From our audience, just to share that with you, what your opinion was about Ghana's market attractiveness. Most of you agreed with the statement. About 75% were responding and were in agreement. It was interesting to hear Albert having a differing opinion. And so my next question goes to you, Albert, in terms of what you think the key innovation areas are for Ghana in order to accelerate digital commerce.
So it's interesting. That's your second question, coming off the back of my colleague from the central bank talking about remittance rates, etc. I did mention on our last call that for us, one of the things that is still an issue is that finance transaction fees are still quite high. I'm very clear that it's not all of it is within the central bank's purview, especially rates that go to international companies like Visa, Mastercard, etc. But that definitely is a major bottleneck, because especially in the small gadget space, the margins have shrunk to almost 5, 6, 7%. So if you're paying transaction fees of anything between 1.5% to 3.5%, that's quite substantial. So that's definitely one of the bottlenecks. The second for me would be properly organized third-party delivery. A lot of us e-commerce companies are forced to put in capex in infrastructure for delivery because the delivery space is still somewhat not very organized. So that would seem to be, for me, one of the major challenges also to digital commerce. And then the last would be HR. I'm not sure I have an answer to what the solution should be or would be, but finding the right skills for people to work in this digital commerce space is an issue. So those would be my top three: transaction fees, a more organized third-party delivery, service providers or operation, and finding the right skills or HR within organizations. Those would be my top three.
Okay, thank you. It'd be great to hear from the other panelists as well, from your perspective. Jill was also asking about what are some of the need to know perspectives, considering the barriers, given that, well, the Ghanaian ecosystem is quite robust, but we still find ourselves with challenges around fragmentation and high costs, as described by Albert in the skills gap.
So I think I would very much agree with a lot of what Albert indicated. I still think that digital literacy is a barrier, but above all, the ease of logistics and payments and financial transactions, especially in a ecosystem where open banking isn't quite as active as it is in other markets, including chargebacks or customer protection. I think those are all major barriers for this really picking up speed. But I would say that I think, especially if we take a broader view of e-commerce and not just looking at direct to consumer, I also think e-commerce has a major role to play in helping businesses, manage their inventory in a more efficient manner, helping them really reduce their own cost savings and access to real-time products.
Great, thank you, Lexi. Any thoughts from Kweku?
Yeah. I would follow up on Lex. Really will want to focus on how we can sort of strengthen the value chains and the ecosystems as well, and that will inure to benefit for all of the companies that we work with as well.
Mm-hmm. Mm-hmm. So, I think just thinking through some of the barriers that we're hearing, and I keep on going back to what Albert was referring to about, just the margins, right? The cost of doing digital, and the focus of this program, which is about expanding the reach of digital commerce into the informal sector and the mission to make it inclusive. And so I'd like to turn our attention to about thinking of the inclusivity of digital commerce, considering the barriers that we're facing, right? It's even harder than to reach a less ready market. Let me bring up the second poll to get the temperature on how we feel about the challenge of inclusion, financial inclusion, and as it relates to digital commerce inclusion. So I'm launching the second poll for our audience and panelists. Consumers are not financially, agree, disagree, or unsure. Consumers are not financially included enough for digital commerce to be adopted more broadly in Ghana. And as we wait for some of the responses to come through, any reactions from the panelists?
I will not, I think sometimes I will talk like a central banker. We normally talk in the probabilistic terms because we see different sides to the same issue. And also I would take that approach and explain myself based on the issues. In a sense, if we talk of financial inclusion based on the criteria used by the global funders to indicate the level of financial inclusion, from 2014 to 2017, Ghana grew its financial inclusion level from 41% to 58%. And currently, we haven't done any survey yet, but looking at what is happening and the anecdotal evidence, we think that we've grown past that mark. Having said that, we're looking here at the issue of effective financial inclusion, especially in the digital space, where we expect that people will begin to use the power that they have acquired in using digital financial tools or services to do more. in a formalized manner. And that is a challenge that all of us are confronted with at the moment. And I would like to extend this to the point that Albert raised concerning the cost of digital financial products or payment services. Currently, to the individual, cash is free because the risk to cash in most places in Ghana and to the marginal consumer is negligible. And therefore, the cost of cash is very, very low. I would say that it's free. But when it comes to digital payments, there are certain transactional fees that they are confronted with. And if we want to include people effectively in the financial service space or in the economy, then it means that the commerce side will also have to will be taken up. In this case, people should be able to use the digital instruments to make payment at a merchant point of sale. And that is the issue that we are currently trying to address. So how do we define financial inclusion in this sense? Here, then it goes beyond ability to transfer money with your phone to another person and the funds being cashed out, but letting the funds remain on your phone so that you can transact with the funds. And if that is the issue that we are currently looking at, then it means that there is a lot that we need to do to be able to address that challenge. And that is what I would say for now.
You have Victoria and Tui in the audience agreeing with you that we need to evolve the transactional behavior around mobile money beyond just withdrawing, and especially for rural folks where the cost is still a barrier. Panelists, any other thoughts from you on how we might be able to make? Go ahead.
Yeah, so I just wanted to make first a quick comment. The comments coming from the central bank rep is actually quite candid. Seeing that he's from the central bank, I would have thought he would have just given it a thumbs up, and not sort of speak to the other side. So it's actually quite a refreshingly candid perspective from him. So yes, he's absolutely right. Those indices are exciting. And also because of where we've come from. I mean, we had very, very low financial inclusion. So naturally, from when we started to accelerate financial inclusion, we would see some significant growth, which is a good thing. Yes, but to the point that he makes, that growth needs to convert into a lot more digital activity in the space. So for me, the two things I'd like to add to the candid comments that he's made. Number one is that, look, we've always known that digital money, the more digital money approaches towards it being proprietary, the less people are inclined to use it, as opposed to if it moves more towards it being a universal legal tender. So I'd love to see a lot more services riding on the back of all this financial inclusion of mobile money, etc. And to justify why instead of carrying my cash, I would want it in electronic money to be able to access all the products and services that I would under normal circumstances, number one. Number two, I can't overemphasize it, the rates need to fall. I mean, if you, for example, look at your wallet with 1,000 cedis and you wanted to do transactions across different service providers, move it around, you probably might end up losing maybe 5-6% of that amount in charges. So the rates have to fall for sure. And the last point for me would be, besides actually, this will be the main two. The rates should fall. And then, oh yeah, I remember what the third point is. The third point for me is, again, financial inclusion is only the beginning of the many other benefits that one can derive from people using electronic money. One of the things I'd love to be able to see, for example, is credit. across these platforms. We've started to see small loans on Momo, etc. And I think that's the direction. It will be more exciting to see growth in that area also, because that's when people are more comfortable sort of using the services that they may not have the money to pay for immediately.
Okay.
Well, excuse if I may come in for a second time. Having made my initial comments, then what are some of the possible solutions? And that is what falls in the domain of our tech brothers who do a lot of innovation in the space to target the needs of the various segments of the population. Here I talk of feasible solutions, merchant solutions, feasible solutions in the sense that we have a number of micro, let me start from the micro, small and medium-sized enterprises. And these are entities that our people patronize from within the communities in which they live. So how do we provide opportunities for our people to make use of the digital monies that sit on their digital wallet within their community? Feasible solutions such that the process is not cumbersome, the process is not laborious, that they feel comfortable using some of these things to make purchases. How do we integrate e-commerce platform, purchase histories, and the use of digital money such that people can access credit on the back of some of these activities, and the merchant themselves can use this as a point of, as a form of scoring the activities with the credit service providers, so that on the back of it, they can access credit to improve upon their businesses. This kind of integrated approach based on the footprints of activities of actors within the space will incentivize the various actors as a means for them to adopt some of this digital payment instrument, or to appreciate e-commerce. And this is something that we need to look at, integrated approach. And I can say that from the central bank perspective and from the Ministry of Finance, some of these things are happening and the project is on the way to look at e-commerce, in particular merchants, digitization of merchant point activities is something that the central bank and the Ministry of Finance have taken seriously.
Mm-hmm. I'd like to make your question even more difficult, Clarence, because this program focuses on informal sector, focus on women and youth, right? Such that the acceleration, the onboarding of MSEs into digital commerce, we would want that to drive informal livelihoods, growth for those small businesses and workers. And so I think even more so asking, what can we do, or what needs to be done so that that has more of a value for women merchants and small businesses, right? Let me just share some data that we've been collecting through our ongoing research to understand where our interventions are priorities. So for example, women merchants in Ghana are less likely to accept mobile money. So not only is it about moving beyond just peer-to-peer payments or transactions, but rather deeper type transactions. But 4 out of 5 small businesses doing cross-border e-commerce are women-owned. And women make up 88% of street traders. So they're predominant in the informal and MSE businesses. And so, you know, your question, how do we make sure that that's especially targeting and reaching women?
When it comes to...
And I welcome comments from the other panelists as well. Please do share.
Yeah, it's interesting that you asking the central bank this question, and it will surprise people that we've taken keen interest in women exclusion in our society, and we are trying to do everything possible to get them included in every aspect of our societal life, and also to empower them economically. Now, Bank of Ghana has started, I think, for the past 3 or 4 years to collect gender disaggregated data. This is to provide us evidence for effective policies that will target women issues and ensure that their issues are properly identified and addressed. Now, having said that, with regards to the women issue, the approach that any entity that wants to assist women has to take is to be that of a focus group approach. Focus group approach in the sense that women normally, women economic activities in Ghana are organized in the form of associations and societies. For instance, you have market women and they have the market queen. You know, if you want to get them to accept digital payments, you need to identify the women group. You need to identify the leadership of the women group and provide targeted education at the group. There are people who can influence the group, their leaders. When you get them to buy in and you get a fintech to develop a solution that meets their peculiar needs, then you are targeting the women and you are addressing them. You don't need, if you try to put them together in the bigger society, then you are likely not to achieve results. They have their peculiar needs. You need to understand their situation, understand their language, understand their norms, their values as a smaller group, and to be able to deal with them. And that is the best way to go about it. That is why we have started collecting data about women. And we are trying to do that to model some of the things that we have been thinking about. We're trying to, going forward, to use big data analysis to be able to mine some of the data that we are collecting and see some pattern of behavior, to be able to advise some of our departments that are responsible, officers responsible for financial inclusion, to have dialogue with financial service providers in order to provide financial service that meet the needs of such entities. And these are some of the things that we are doing. And I can say that women issued green finance and the sustainability of women business is highly on the agenda of the central bank. And with the COVID, some of the results that we gathered from our COVID analysis shows that the impact on women appears to be a bit high, and people in the informal sector, SMEs, because some of them did not have access to digital tools to be able to continue doing business.
So let's talk about those digital tools. I think that's a really important point and good segue here. Lexi, you know, we're hearing about the ecosystem level, but I think it's also important to see the, you know, we heard Alex talking about the need for more innovation to help us scale and to help us quickly grow. And so from where you sit, seeing a lot of innovators and seeing the opportunity, what are we doing to promote adoption of digital commerce by vulnerable segments such as women, but obviously not limited to, also youths are part of our focus. Can you share what you're seeing in terms of innovation?
Yeah. Sure. Yeah, I think one aspect that could really work for women or small vendors in general is not only looking at how they're engaging with their customers, but how themselves are making their businesses more efficient. So I mentioned some platforms that are inventory management platforms. So it enables small retailers to keep their own inventory up to stock much more efficiently and even at reduced costs in a lot of cases. And that then having that sort of core wallet where they're needing digital currency for their payments, then probably will attract them more to accepting digital currency from their customers as well, and enabling that whole value chain. I think these sorts of platforms also really enable these retailers to build a credit history, showing the kind of volumes that they're meeting, showing that they have recurring revenue from existing sources, and how that's growing will really enable them to also access lines of credit, not just from banks, but from other, more digital credit providers that are able to credit score customers, not necessarily based on where they've had loans taken out before or their assets, but instead on being able to really dig into those retailers' data and how their volumes are being driven from their customer base.
Great, thank you. Any thoughts from you, Quaker or Albert? In terms of our polls, please go ahead.
Well, I would just say I was really encouraged by the idea of part of how we bridge the gap is through great products and great solutions. And focusing specifically on the informal marketplace means maybe the solutions can't be necessarily off the shelf or something that's necessarily been introduced from another economy into Ghana, but there must be sort of a customized approach to fine-tuning that solution so that it makes sense for a person who is perhaps vending from a tabletop, and addresses their fears and concerns. Most importantly, like, you know, we assume that everyone would want to be formalized, but some people have a fear of what that means. What's going to happen? You know, what does that mean in terms of additional costs or taxation? What does that mean in terms of information about my sales and my data? So, you know, I think it remains to be seen as more and more research is done on this huge, it's a large segment of Ghana's marketplace. It's informal, some are very micro, and they do perhaps have some fears and concerns, and the solutions have to both be great solutions that get the job done, but then also allay those fears and concerns.
Thank you. I think I'd like to head into our last question and keeping an eye on the time, but let me share what the audience was thinking in terms of the challenges here. We had about 83% of you answering, and most of you agree that the financial inclusion continues to be a barrier, whether we're thinking of it from the standpoint of individuals achieving financial health through inclusion, or businesses that are seeking growth using, you know, financial services like credit as a means to. So I'm going to share that result with you for you to see. But as we come up on our last question, I know we covered several points, and I'd like to bring it together in terms of what it means for this program and why we're here today. So we come from, Maylee spoke earlier today about the program expanding and recognizing that inclusive fintech, and fintech is an enabler in which we can expand and see the role that it plays in digital commerce. And starting with you, Lexi, but obviously to everyone else on the panel, what have we learned about fintech transformation that we need to apply to digital commerce as it relates to scaling the companies in Ghana?
Yeah, well, I think the first thing is fintech is not just payments, which has certainly been, I think, the most sought after sector for investment capital in the last couple of years in Nigeria and Ghana. But you know, on the mobile money side, certainly I think interoperability is a key aspect to really understand, especially in markets like Ghana, where there's several platforms that really need to work together on seamless flows. But beyond payments, you know, fintech is identity, really opening up a retailer's or a customer's identity to be able to see who they are and that they're creditworthy and that they can be trusted. It's access to finance, and certainly in a digital age, that can be done much more efficiently and probably accurately in markets like Ghana. It's ownership of assets, and I think that plays a key role for a lot of these digital commerce retailers as well. And you know, it's also a piece of it that really fits in is how you layer on all of these platforms with the last mile logistics and all to the end consumer as well. You know, financial inclusion is one aspect, but likewise, how do you move the goods from cross-border trade to the retailer, to the end customer, and drive all of that efficiently as possible? So I think that, yes, there's many different verticals to fintech, and it's not just about payments, which I think is the aspect that's come up in conversation a lot today.
Mm-hmm. Yeah, we didn't get to cover logistics. I actually would have liked to have time for that, but certainly seeing the platform opportunity for that, and the need for addressing the fragmentation in the value chain. Thoughts from you, Albert? Thank you. You, Albert, or Kweku, Clarence?
I will come in here and I draw some kind of parallelism between what is happening in the fintech space and see what lessons can be learned to build up a vibrant e-commerce environment. The first thing, we're looking at enabling regulatory environment. That is what defines the fintech space, enabling regulatory environment. We need to have the same enabling regulatory environment for e-commerce business, e-commerce activities. We also need an active governmental or any entity of the state that is identified to be responsible for e-commerce to also provide a strong support for e-commerce group. And that means that we need to take a holistic approach to development of e-commerce, taking into consideration the fact that the means of making payment in a digital environment is to make a use of a digital instrument. And also, we also have to look at addressing the issue of trust. The trust here, looking at credibility of those people who will be providing their wares or their service online, for customers to trust them that when they transact with these entities, they are going to receive what they have paid for. And when there are challenges, where do they go to seek redress? Right. What kind of systems will be put in place to ensure that the e-commerce environment is of the highest integrity? And the issue of standardization, which is also common in the fintech environment. Systems are standardized and there are common protocols making it possible for interoperability to take place, as Leslie spoke about. How can we have similar systems in the e-commerce environment? How can we develop some of these systems? What kind of standards can we develop to make it easy in terms of transportation when products or purchases are being delivered to customers? How are things going to be packaged? What is the environment in which these things are going to be packaged? How are these things transported? The hygienic environment within which some of these things have to be transported. What are some of the things that one has to look out for to ensure that the goods have not been tampered for? And all the other standards and some kind of interoperability within the street, some common standard is critical. And this is what has defined the fintech space for financial services. And if we can develop a similar system for the e-commerce space, then we are on the way to building a trusted e-commerce environment.
Thank you. I would like to wrap up. We're a few minutes over. So if you would like to ask questions, I wasn't able to address all of them today. I was trying to weave them in, but I will share them with the panelists afterwards. So thank you for all your curiosity and great questions. So we'll hopefully be able to follow up after. I want to thank our panelists, Albert, Clarence, Lexi, and Kweku for sharing your insights with us. I think the audience was quite impressed with the candidness and thoughtfulness. Well, not surprised by your thoughtfulness, more I think the candidness. The insights that you've shared with us. And I really enjoyed hearing from you and having this opportunity to learn from you. So thank you for the participation and the time today. Let me move on then to our next session. I'd like to welcome Matt Grasser. He's the Portfolio Engagement Manager at Catalyst Fund, Inclusive Digital Commerce, and he's going to be telling us about the Accelerator offering, the selection criteria, before we move on to the pitch showcase following the session. The pitch showcase is being held virtually and on site at MEST, and so any of these questions you may have, please put it to your chat. We'll try to answer those live as well. Let me pass it over to Matt Grasser.
Great, thanks so much, Jane. And yeah, thanks to everybody who's been making such amazing points so far. So I think we've got a few minutes here. I'm gonna try to be brief so we can jump right into the showcase as quickly as possible. But I did want to kind of build on the amazing points made in the opening and fireside chat and the panel we just wrapped up with, and cover a little bit more about the program itself. So Just to recap, this is a program that's focused on accelerating 6 growth stage digital commerce companies in order to better serve informal small businesses in Ghana and help them to adopt digital commerce in order to scale their own businesses. So yeah, as I think a main point here, our focus is really on growth stage. It's slightly different from the typical Catalyst Fund FinTech Accelerator in that we want companies to already be somewhat established and be working on kind of removing of barriers with them. And of course, just to mention again, Jane mentioned it a couple of times, but that the end focus is also on increasing not only resilience of MSEs, but reaching more low-income Ghanaians, and in particular, women and youth. So in terms of programmatic goals, that's a very high-level recap. All of the points I'm making today, you can learn a little bit more at the link on the bottom right of the screen, and that also includes contact information for us as well, and social media and whatnot. So feel free to check out that link if you have curiosity that goes beyond what I cover here today. Secondly, I think this is a point that Lexi and Jane both made on the past call, but I think when we say digital commerce, I really want to make sure that we're not narrowing ourselves down to just talking about e-commerce marketplaces or just payments. I think it's really critical to highlight that this program is an ecosystem approach to acceleration. So it's not only focusing on that end channel to customers and that merchants can run, but also all of the aspects of the ecosystem that are around that. Things like unique ID, payment infrastructure, of course, which were mentioned, but also, you know, the pieces related to kind of last mile delivery, logistics, collection points, warehousing, representing companies in the digital world for their customers. So things like online marketing and business tools and customer support. And then of course, financial services and payments infrastructure as well. So I think the critical point here is really that this is like a multimodal approach. It's an ecosystem approach to acceleration that focuses on all of these areas. So we can move to the next slide. I did want to recap on a high level that that we offer several forms of support for the 6 growth stage companies that we'll be working with in the next 2 years. We'll be tailoring this support dependent on each company's needs. So the 4 areas on a high level are flexible grant capital, so up to 120,000 US dollars to each company to focus on and use for the purpose of focusing on MSEs. Secondly, we'll be providing tailored venture acceleration support. So I'll elaborate this on the next slide, but effectively we have a team of experts who's been working in this space for years and that we can unlock depending on each company's needs. Then we've got kind of 2 forms of networks that come along with the accelerator itself. So we have local and operational support. So this is unlocking local expertise through cohort-based meetups, local curated workshops, access to networks of Ghanaian entrepreneurs, and more. And this is done largely in our partnership with the MEST program in Ghana. And then the Catalyst Fund ecosystem, the broader ecosystem of partners and investors, is another kind of mode of connection or support that comes along with this program. So whether it's connections for partnerships to our circle of corporate innovators or mentorship, whether it's follow-on investments that are needed through our circle of investors, whether it's some facilitated conversations with government officials or programs or other local networks, we have these relationships in place and offer those to the 6 companies as well. So these 4 areas are the high level. I think I wanted to double click on the second one here on the next slide. So what do we mean by tailored venture acceleration support? Well, within our team at the Catalyst Fund, we've got a bench of former entrepreneurs, sector experts, and other kind of deep digital commerce and fintech experts who can provide deep curated support across a variety of specialization areas. So Kweku had mentioned earlier, like one of the areas that's really important is bringing the voice of the end user and customer into this, making sure that you know the products and solutions are tailored to the actual end users of the product, whether that's an MSE or the customers of their business. So you know, of course, we offer a kind of deep technical infrastructure and product scaling roadmap, things like data analytics coaching and things like this. Of course, business modeling deep dives, since we're focusing on removing barriers and scaling a business. But also this raising the voice of the customer through user experience research and application of that through human-centered design of the products and pilots themselves. And I think we've mentioned a bit about partnerships and integrations, marketing, messaging, and sales. And again, additional context-specific expertise that the team brings, whether it's relating to agent networks, digital onboarding itself, supply chain finance, or a whole set of other areas. So this is really what we mean when we say tailored venture acceleration support, when you see this throughout the day. And I guess finally, I'd just like to wrap up on the last slide with what we've heard in terms of the benefits, in terms of the context. If you're interested in hearing more, if you think your company is a good fit for this program, we do have these eligibility requirements. There's 8 of them. We have an investment advisory committee that's composed of experts in West Africa, and they'll be vetting applications based on these requirements here. We're currently sourcing for our first program cycle. You can go to the link in the big box here. But I think a few of these have already been discussed, such as, focus on youth and being growth stage and things like this. But I did want to mention specifically that we are focused on companies that do have already some traction. So serving at least 1,000 small businesses, that before the grant comes in, that there's 6 to 12 months of runway available, and that the product is Ghana focused, has to be operating in Ghana at least, and ideally kind of Ghana based. And if you feel like you meet these criteria, yeah, please do reach out at the expression of interest form on the link provided here, bfa.works/EOI. So with that, I think I will turn it over to the showcase. We got an exciting few companies to present here today, and really excited to hear what they have to say. If there are questions immediately, I can answer in the chat. Otherwise, again, please, you can see the link in the lower right and visit us there. Thanks so much.
Matt, we don't have questions coming through the chat right now. Someone was raising their hand, but I don't have the question. I suggest we move on to keep with time, so we can move to Felix over at MEST.
All right. Good morning, good afternoon, good evening, ladies and gentlemen, esteemed guests, wherever you are in the world. Welcome to Catalyst Fund's Inclusive Digital Commerce launch in partnership with the Mastercard Foundation. We're coming to you live from the MEST incubator in Accra. So we're here to hear from 4 very exciting ventures that are changing the e-commerce space in Ghana, and they'll be receiving feedback from our expert panel of judges. So first, we have Gregory Roxon, who's the CEO and co-founder of M Pharma. We then have Harriet Edinkra, who is an investment analyst at 4DX Ventures. And then we have Bruce Lule, who is the founding investment principal at Chandaria Capital. Please put your hands together for our judges. Thank you. So without further ado, to start us off, we are going to be starting with a bang. We're joined by Kingsley from Kudigo, who's putting out an integrated retail solution that is revolutionizing the continent. Please welcome Kingsley.
Hi, everyone. My name is Kingsley Abrokwa, and I'm the Chief Enabler at Kudigo. I'm going to take you through a journey of what we've been up to over the past 3 years as we sought to redefine consumer retail in Africa. Now, Kudigo's story started from solving a very basic problem for the average retailer on the streets. And what we sought to do was address issues that affected them on a day-to-day basis. Today, across the continent, 90% of consumer retail is done by the informal and micro businesses. But then when you dig deep down, you realize that these people are today still using book to capture their records. A lot of these people as well do a lot of cash transactions. They are not able to keep verifiable records, thereby not able to even scale up their business by getting funds from banks or MFIs. And these are stories that they will tell you when you go and engage with them. Now, when we started Kudigo, we saw that to solve this problem for consumer retail, we had to start from the bottom up. But then building that bottom up solution, we needed to ensure that everyone up the value chain also saw what we were doing and could empower these businesses. So we started with the storefront solution and went on to build the storefront mall, build the rapid gates, and these are all solutions that empowers the entire ecosystem together. So back to the basics, what did we really build? We built a simple mobile app we call the Kudigo Storefront. And what this application does is it enables the average retailer on the streets to simply digitize their book records into a digital record by just using their smartphone. Now, the key differentiation factor for us was to ensure that the solution we offered was usable, was built within an African context, and captured all the essential data points that will ensure that that retailer in Makola, by using Kudigo Storefronts, 3 years from now, can be able to open 3 or more stores. Now, it's not just about what we said or what we wanted to do. We actually have enough traction to show that this solution works in the market. Today, we have over 8,000 retailers across 3 countries who we've helped to digitize how they do business. Not only are they processing orders, but we've been able to track and ascertain how many of these orders are cash. We've been able to move a huge chunk into non-cash. We today as Kudigo have the most data sets on products on store in inventory and can tell you who sold what product, who bought it, who is buying it at any stage of time. And again, for us as Kudigo, we saw that we needed to look at the data to tell us where the industry was going. And what the data tells us is that although a huge chunk of the market is owned by women, they are still the most marginalized. They do all the work. They even employ more women who do a lot of the transactions at the retail point. And this tells you where the growth and impact really sits. Now, COVID-19 hit in March 2020. And at that point, we had digitized over 6,000 businesses. From the graph, you can see these businesses instantly suffered the impact and were losing money, losing revenue, losing everything they built. So what did we do? We simply built what we call the storefront mall, which turned their in-store inventory into online inventory. So by just flipping the switch, all these retailers could now have an online store without having to figure out what even e-commerce means. And today, from April to now, we've been able to convert over 3,000 of these physical stores into online stores with literally zero marketing budget. And we not only did this, but it ensures that all transactions done online are fully paid for and fully delivered, ensuring that there's no cash being exchanged in that online transaction. Our growth has been fueled by understanding what the users want, focusing on where they are and how we can help them grow and scale. Again, there's competition for us across various industry verticals. For Kudigo, our solution cuts across fintech, retail tech, and big data. And on each vertical, there are various competitors there who are trying to do what we are doing. But today, on the continent, there's no company who has defined a niche that we have and is offering a solution that captures all these various niche markets. So the market is big. Our entry market has always been Ghana, where we started from 3 years ago. We currently have presence in Nigeria, and we intend to scale this up across the entire continent, focusing on empowering the average retailer to grow their business. We don't do this alone. We work a lot with strategic partners, key amongst them being InterSwitch, who through that partnership, we are able to process payment transactions across over 24 countries on the continent. We're working with Mastercard to improve Mastercard QR payments at store location, ensuring that there's very little interaction with people when they are making payments. We work with Sage to put in the accounting model that ensures that each retailer now has verifiable financial records. And one of our investors, Standard Bank Group, also ensures that we can now offer financing to these businesses as they grow and scale. Now, for us as Kudigo, their future is bright. Today, we are talking about digital commerce. We saw it 3 years ago, and we see ourselves leading this trend and ensuring that a few years from now, every store on the streets will stop using paper, digitize their record, and probably will have the next Walmart coming out of Ghana. So I didn't do this alone. I have a team who we worked together for a very long time. A few of us are past masters. We speak to the fact that we understand the ecosystem, and all these solutions are homegrown. Every single code was written by this team of people right here in Accra, Ghana. We have a board that ensures that we do the right stuff. Now, they are not just board members, they are also investors in our business, which ensures that whatever we do, corporate governance, compliance, everything is well documented for growth and scale. So that is what we're doing at Kudigo, and we invite you to join us on this journey. Thank you.
Thank you, Kingsley. Now over to the judges for feedback.
Great presentation, Kingsley. Thanks for sharing. It's a lovely thing that you guys are doing over at Critical. I just have a question for you. What would you say are the drivers of growth for Critical, being in the business for 3 years now? What have you identified as the key drivers of growth? And you mentioned the statistic about the women being the most on the platform but yet marginalized. Are there any projects that you're doing at Critical to make sure that they are more included and grown in the business?
Thank you very much for that question. So for us, what we learned as we built a solution was that these people who were supporting already knew how to do business. We weren't going to teach them any new business skills. We were bringing in tech, and we had to offer it in a way that came to add value to their business rather than trying to change what they are trying to do. So for example, we do a lot of hands-on training. We spent a lot of time on call center support. Our entire call center is built around WhatsApp, ensuring that where they are, we can access them. For the women in particular, most of them, when you try to engage them, they are a bit wary of engaging with you. They will say, oh, let me ask my husband first. But then when you try to let them understand the value to their business, they now begin to lead the process. So for us, it's really situating the context in what we can do to help them grow rather than what they can do for us. Once we were able to achieve that, we saw the process of acquiring customers and scaling them up quite easy for us as we grew.
Hi, Kingsley. Hello?
Hi, yeah, we can hear
Hi.
you, sir.
Great. Thank you for your presentation. Amazing stuff that you guys are doing. I wanted to understand, so other than helping SMEs control their stock and manage it, where do you see customers really gain value from using your product?
So again, for a customer, they are always looking to get whatever they spend back, right? It's all about loyalty and about the fact that even in consumer retail, till date in Ghana, people go to buy stuff from the store, get home and see that, oops, it's expired. So it's all about customer trust. And where we see it going is that with these retailers now having data on these customers, not only are they able to have a more personalized interactions, but the customers are also able to relate to them on the next level. So for most customers, about the fact that if I need stock today from this woman, I literally don't have to actually go there. I can message her and say, I need this stuff, and she knows exactly what I want and can offer it to me. Additionally to that is the fact that customers now today love a lot of discounts. And these retailers, by knowing which customer does what, can design bespoke discount or loyalty packages for customers who come more than once. So again, it's all situated in the sort of industry, be it pharmaceutical or consumer retail. By the end of the day, the customers dictate what they want from the merchant. And with the data we offer, the merchants are able to situate what the customers want in the right context.
Okay, that makes sense. With regards to the financing products that you're now providing users of your platform, how well is that going? Obviously, that can be very useful for a small shop or an SME to take on bigger orders and sell more product.
Right. So a month ago, we did a research of over 1,000 of our merchants to try to understand the impact of COVID on them. And the results, which we'll share in the next coming week, showed that a lot of them had real issues and a lot of them wanted money. Now, at the end of the day, if you want to finance a business, you are looking at the credit risk profiling and ensuring that it can actually pay back. With the data we have at Kudigo, we are now able to create a well-defined credit score of these merchants to ascertain who needs what financial help, how much they need, even to the extent of financing their inventory and not giving them cash. Now, these are things we've now built and working with a lot of banking partners to ensure that the banks who have the funds can now find those who need the funds and can de-risk that access to the fund by using our data set. And we are hoping that by the end of here, we can roll out this credit score algorithm
which will be strictly for inventory financing. We'll look at who needs what inventory, get the right supplier, work with the financial partners to ensure that they supply the inventory to them, and all repayments are done through non-cash means, either for mobile money transactions or QR transactions. At the end of the day, de-risking it for everyone across the value chain. That is what we're working on now. We intend to do that by end of year and Q1 next year.
All right, it seems we have time for one more question. No, that was the last question, sorry. We will have to move on.
All right, thank you very much.
All right, let's put our hands together one more time for Kudigo. All right, next up, we have Plendify. They are an online B2B marketplace for all businesses from informal to formal. Please welcome Bo from Plendify.
Here are the facts. In Ghana today, there are over 3 million small and medium-sized enterprises that are not online. Second, there are over 500,000 suppliers that are also not online. Third, COVID-19 and its disruption. These facts were the perfect recipe for Plendify's B2B marketplace platform solution. Over 90% of businesses spend countless hours searching offline for affordable, reliable, and trusted suppliers, leading to wasted time, poor quality, and overspending. Until now. Recently, we spoke to two of our clients. Mr. Samuel Boateng, head of marketing at Vitamilk. He said, presently, 99% of his distribution channel is offline. He wants to bring it online. Second, Mr. Raj Mepuri, head of marketing at Bell Aqua, also said, till now, we have never been online. These are but two examples of how we're connecting informal, micro, small companies with larger, more formal businesses and brands. Since launching early this year, we have onboarded 1,000+ businesses and also brought on board more than 10 large national brands, and it's growing every single day. Our marketplace that we built was based on deep market research on the ground, talking to different stakeholders in the ecosystem. For example, the National Board for Small Scale Industries, the Association of Ghana Industries, Ghana Post GPS, and also the Mastercard Foundation, amongst others. So we built something that we know that the Ghanaian business owner wants and can use immediately. Just to emphasize, our platform is strictly B2B, and that is our laser focus. We are helping wholesalers, retailers, and suppliers, informal, micro, small, scale into bigger companies. Here we have one of the site's features that we love very much, which is the verified badge. Every company's goal, whether small or large, online or offline, wants to grow sales. How do you grow sales? If you are trusted. So on our marketplace app, we give you our seal of trust, a verified badge, once you give us certain information and documents, which, by the way, we check on them every 3 to 6 months to ensure that you are still a trusted business on our platform. This one is my personal favorite. We all know that in Ghana, the issue of addresses can be a pain. Let's say you own a tabletop store and you have no address, but yet what you sell is of value to people. If you're on our marketplace app, you can generate a unique address code for your business right in the app. And as a buyer, I can find you And with a click on the Google Map icon in the app, it'll bring me straight from my home to your tabletop shop seamlessly. How cool is that? Lastly, but not least, is let's say, for example, you own a business and you get to work at 8 a.m. to find your door handle broken. You can open up our app and put in a request for quotes, searching for door handle suppliers on the marketplace. And before 5 p.m., you will receive multiple quotes back from suppliers of door handles. You can compare pricing and pick the best one, all right in the app. Our company keeps growing. We are a young, dynamic, gender-inclusive company that is also very experienced, and we're looking to help scale this company and Ghanaian businesses further along in their journey. So I invite all of you to join Plentify's B2B marketplace and help us to scale, to accomplish and onboard 100,000 businesses in the next 2 years in Ghana and beyond. Thank you very much.
All right, thank you, Bo. Over to the judges for feedback.
Hi, Bo.
Hello, Bruce.
Thank you for that presentation. Great to see that you're working on ways to enable businesses to grow in Africa. I wanted to ask a question on the typical profile of your customer. What kind of business are they doing? What kind of revenues do they generate? And how are they really using your platform?
Great question, Bruce. So our current customer profile that's typical is a 30-year-old female who owns a boutique beauty and cosmetic shop and is looking to generate more leads or more sales. And so they are currently our typical customer. They're tech savvy and know how to use apps either on a smartphone or, for example, also on the web as well. And essentially, they're looking to promote their business and get more sales as well from different leads on the platform and also elsewhere.
How many people do you have using the platform? So maybe not on the business side, so maybe on the side of people that are looking for services.
Are you referring to customers or are you referring to buyers or suppliers?
Customers, I guess.
Okay, so basically because we are B2B focused, right, a customer is also a buyer as well as a business. And so together, both suppliers and buyers on the platform are approximately 1,000 plus. And so they're always interacting to see what's out there and then buying from each other, essentially.
Okay, cheers. Thank you for that.
Thank you, Bruce.
Hi, this is Gregory. I was wondering, how do you solve the issue of disaggregation from the platform? Once a supplier gets connected to a buyer, that instead of transacting on the platform, maybe they do it once, but then they do a side deal, add it back to then transact offline, which ends up obviously leading you to have to acquire more customers. How do you think about making sure that you keep transactions going on in the platform even after the first transaction?
Yeah, so Gregory, currently our model isn't to transact on the platform itself. Currently is, if it's okay to transact offline, that's fine. Our company is a SaaS company. And so essentially we have different plans. And so on the platform, as you get more features, you pay some money to us on a recurring basis. And so for now, our goal isn't to have you transact on the platform, but down the line, that might well be the case. Does that answer your question?
Yes, please. Thanks.
Thank you, Greg.
Great presentation. On the journey to reaching 100,000 suppliers in the next 2 years, I'm curious, what does that path look like in your view? Can you walk me through how you get from where you are to 100,000 suppliers?
It's a very good question, Harriet. And so the thing is that we have seen the data in Ghana. Fortunately for us, early this year, working alongside the Mastercard Foundation, we did some relief programs for companies that were hit by COVID-19. And so we know that the numbers are out there, right? And so first of all, we are seeing a daily average onboarding of the platform of about 50 a day. And so between now and the next 12 months, we can see realistically about between 80,000 and 24,000 companies joining on. And then obviously with some kind of network effect as well, in the second 12 months, we can easily see that curve go up as well. Yeah.
Are these onboarding channels, like what channels are you using currently for acquisitions? Do you have like boots on the ground? Is it all digital? I'm curious, 50 a day seems to be like quite a significant number. And I'm curious how you think that moves from 50 to 2,000 and what channels you are going to explore versus costs invested in acquiring these suppliers.
Great question. So currently, no company can exist without distribution, as I'm sure you're well aware of. And so our plan is to leverage partnerships, right? As I already mentioned before, for example, we work very, very closely with, for example, the National Board for Small-Scale Industries in Ghana. They have a large following under their umbrella, for example. We are looking at that particular agency to help us also onboard their clients, amongst other types of similar partnerships. And so really our goal is to tap into already existing networks and then onboard them that way. And so we think this is a very achievable goal in the next 24 months.
Got it. Yeah, I think that makes a ton of sense. If you're going through partnerships with existing bodies, that makes quite good sense.
Yes.
Thank you.
Thank you.
All right. Thank you. All right, let's put our hands together one more time for Blendify. Hot on his heels, we have another exciting venture. We have AgroCenter. They're a digital commodity distribution platform that's creating shared value for both businesses and smallholder farmers. Please welcome Francis.
Sorry?
Hello, my name is Francis Obrikwan. I'm the CEO and co-founder of AgroCenter. So in the next 3 to 4 minutes, we are going to look at an innovative platform that is creating value for both businesses and smallholder farmers in the agricultural value chain. In December 2015, my co-founder and I decided to move into a venture that has been largely forgotten. It is the agricultural sector. We're looking at how do we use technology to enable services for businesses and smallholder farmers within this value chain. So our journey took us through the length and breadth of the country, speaking to interested smallholder farmers, businesses, active value chain players to find out what the core problems are. Our research led us to 2 critical problems. One was a lack of access to extracted markets that is always encouraging exploitative buying. So we found out that middlemen prey on smallholder farmers who cannot find a market to sell. They usually buy commodities that's usually 40% below what the market prices are. So year in, year out, we find out that smallholder farmers are losing close to $300 million as potential income through this exploitative buying. Secondly, also the lack of financial inclusion for smallholder farmers made it such a way that farmers could not access digital financial services, such as loans, mobile payments, pensions, and even crop insurance. Based on these problems, we at AgroCenter innovated and came up with 2 critical verticals that is solving the problem for smallholder farmers. CropChain, which is our digital supply chain platform that focuses on the more of the farm to fork approach. It is a demand-driven platform that connects smallholder farmers directly to small, medium, and large-scale organizations who need raw materials for production. So we are talking about companies in the FMCG, companies in the brewery sector, companies in the production, even companies in the export sector. Secondly, we look at Lendit, which is access to financial services for smallholder farmers. That anchors on 4 critical services. We are looking at pensions, we are looking at micro lending, we are looking at crop insurance, and then final digital payments. Since 2018 till now, we've had very impressive traction. On AgroCenter, we have close to 46,000 active smallholder farmers. Registered farmers is in the neighborhood of 80,000 currently, with 45% being female. Since 2018 till now, we've done over 6,000 metric tons of commodities traded on the platform, generated more than 900,000 in revenue, and we are active in 200 communities spread out in 6 regions. The plan is to have digital footprint across the 15 regions in Ghana by 2021. At the core of what we do is impact. We track impact based on 3 pillars of the SDGs. 1, we look at zero poverty for smallholder farmers, where we try to enable fair market trade for smallholder farmers. Secondly, we look at zero hunger, where we ensure sustainable food security. And then third, we look at gender equality, where access to land for women in Ghana is very critical. From a team that started as 2 co-founders, we've grown over time. From looking at, we have close to 14 full-time staff, close to 60 part-time staff who in diverse ways contribute their services to the development of Agro Center. We are ably backed by about 4 venture capital firms and growing at a steady rate. Our partner network is very diverse. We have connectivity to MTN, Vodafone. We have access to financial services such as ABSA. We're looking at Pan-African Savings and Loans, which is a subsidiary of EcoBank. Enterprise trustees that provide pensions to the smallholder farmers. Guinness Ghana Limited was one of the largest off-takers that source for sorghum and maize from 1,000 of smallholder farmers. I invite you to join the Agro Center journey by following us on our social media pages and also checking out us agrocenter.com. Thank you very much.
Thank you, Agro Center. Judges, the floor is yours.
Thanks for the presentation, Francis. Ag is indeed a very important industry that still needs like a lot of innovation. I'm curious, can you talk more about the off-taking side of this business and what are the key insights that you've gathered over the years? Because in my sort of experience in interacting with a lot of these ag companies, it seems to be that you'd have to do the input financing as well as the off-taking, and I don't know to the extent for which that is true for Agro Center, but some insights on your journey would be helpful.
I think, yes, definitely. If you look at how we've structured the platform, it's an end-to-end platform. So I mentioned crop chain and then Lendit, both are interrelated. So if you look at a typical user scenario such as Diageo, which is Guinness Ghana Limited, they source for maize and then let's say sorghum. When it comes to the onboarding, so we are involved with both on the boots on the ground from farmer acquisition, looking at where the farmer is onboarding on the platform, providing extension advisory services, providing input financing through our network of financial institutions. So I mentioned ABSA, I mentioned Pan-African Savings and Loans. They provide credit to smallholder farmers. So in August this year, we provided credit to close to 900 farmers in our farm plains alone, with a total of close to 800,000 Ghana cedis, mainly for input financing. So that is mainly, so it's more of an integrated platform where we are involved with boots on the ground from A to Z.
That's helpful.
What is the revenue monetization model?
Yeah. So we make money from 4 ways from the businesses. So one is commission on trade volumes that we charge to these big institutions. For the smallholder farmer, it's free to join the platform. We also make money on subscription on the platform. So we white label the platform to these institutions. So our revenue comes from even DFIs, from financial institutions who will provide big data. So for financial institutions, what we do is on the Lendit platform, we provide what we call the credit score algorithm. We de-risk their investment to smallholder farmers by giving them potential smallholder farmers who can repay their loans. So mainly we look at commissions on trade volumes. We look at subscription on the platforms. We look at also subscription from the mobile money side, and also commissions from some of these financial institutions, the pensions, etc. So it's mainly a B2B side. The institutions pay us based on these 4 key revenue drivers I mentioned.
Hi, Francis. Thank you for your presentation. I had a question. You're providing a lot of support to smallholder farmers. Do you provide any form of insurance product in the case that crops fail?
Yeah. So I mentioned as part of the digital services, we have crop insurance, which is provided by Alliance. So Alliance does the crop insurance, which is the bundled service alongside the loans we provide to smaller farmers. So in case of crop losses due to, let's say, natural disasters, the loan is insured. That prevents the smaller farmer becoming indebted to the financial institutions, yes.
Great, great, that's great. With regards to crop chain, how do you ensure that the product's quality is in line with the businesses that are ordering?
Yeah, so mainly, as I mentioned from the beginning, it's a demand-driven platform. So what we do is we usually go into what we call a long-term contract with these institutions who come up with very standard metrics that they want. So let's say if Diageo is sourcing for maize, they give you a long list of standards. Then we have field agents who test against these standards on the field to ensure that, let's say, aflatoxin level, moisture content meets what these institutions want. So typically, the quality control happens, one, at the smaller farmer level, two, at even the aggregation centers, which are more of the warehouses, before these goods get transported to the final consumer. So we call it the grain passport. For every commodity that leaves the warehouse, you find out that attached to the weigh bill is what we call the grain passport, which includes quality control tests, hinging on 4 services, aflatoxin level, test for moisture content, test for foreign materials, even test for chaff. So mainly these have to fall in line with what these institutions want to avoid what we call reject.
In the case that you get rejects and waste, what do you do?
So I can confidently say we've not had a single reject on the platform because I mentioned the quality control starts from the smallholder farmer level. So before these goods get to even the warehouses, they already meet the standard specifications of what the institutions want. And then for every goods that leave the warehouse, you attach what we call the grain passport. That also ensures that the standards are what these institutions want. But then in case of event, maybe usually in goods in transit, something can happen and then there's a reject. Usually the crops are brought back to the warehouses for further. So if let's say along the way it rained and you find out the grains got a little bit wet, so increase the moisture content, you have to take it back to the dryer to dry to ensure that it's about maybe 12% or even less. So those are some of the measures that you can put in place. But I can say for over the last 3 years, we've not had a single reject.
Very impressive.
All right. Yeah. So do you have any statistics around the state of the farmers before and after, they joined the AgriCenter network? For example, you mentioned that there's about $300 million that they would have made. Are there any statistics around how that has changed post joining AgriCenter?
Yeah. So if you saw the SDG slide, one of the key trackers we do is the zero poverty. So we look at the financial improvement of smallholder farmers. Before farmers join AgriCenter, most of them usually make $1 a day based on not getting access to the extracted market. Based on the last impact report, so we carry out what we call impact reports on an annual basis. We do that through independent impact companies based out of the country. So based on the last impact report we did, our farmers are now currently at 2.5%, $2.5 per day. The target is to move them to about $4 a day. That is in the next 2 to 3 years. That is what we are aiming for.
All right. Thank you so much, Francis. We're out of time for feedback. All right. So to end us off with a bang, we have Shopper, and they are looking to make sure that not a single retailer is going to run out of stock. Please welcome Frank.
Hi, my name is Frank Nanade, a co-founder of Shopper, the startup digitizing the informal retail supply chain in Ghana. If you run a grocery shop, known as provision shop in Ghana, especially in the communities, you are responsible for sourcing inventory yourself, mostly 2 times a week. This process involves Agnes, who is a provision shop owner, to make a list of the items she needs to restock in a shop. She picks a cart to the market, roam from shop to shop looking for products at best prices, and then transporting back home. The result of this is that Agnes incurs extra cost on transportation, and wholesalers in the market also add higher margins on the product they sell, which reduces Agnes' profit margin by 15%. At Shopper, we are digitizing the whole restocking process of Agnes through our Shopper platform, which allows informal retailers such as Agnes to order products with high rates of sales at lowest cost and best prices from suppliers and have it delivered to their shop within 24 hours. This is how our platform works. So a sales representative working on the field registers the informal retailer on the shopper platform. The customer then places her order via our mobile app, web app, a toll-free call, or WhatsApp. The order is then processed and picked up by a tricycle rider to deliver to the customer in the next 24 hours. Upon delivery, the customer has the option to pay cash or mobile money to complete the transaction. With us, informal retailers are able to increase their profit margin by 8%, also restock their shop without going to the market, and as well as order goods at best prices and have it delivered to their shop within 24 hours. As a business, we make money by adding 7% margin on all products on the shopper platform. The opportunity here in the Ghanaian market is that there are over 300,000 informal retailers operating in Ghana right now, valued at $139.6 million. This industry is ripe for disruption and has attracted a few players. However, unlike our competitors, we have the first mover advantage in the Ghanaian market, and we don't charge delivery, and also we have sales representatives working with the informal retailers on the field to build strong relationship with them. Currently, there are over 507 informal retailers registered on the shopper platform, and we are in the process of ending this quarter with a revenue of $13,000. Next year, we plan to end the year with over $325,000. Through the partnership with MEST, Mastercard and Catalyst Fund, we plan to achieve our vision of digital and financial inclusion of informal retailers by providing microcredit for informal retailers, a payment processing platform for informal retailers, to inventory management, to predictive analytics. The team behind this project are individuals with diverse skills in product, sales, and distribution. Our CEO, Yurik Shekap, has 7 years experience working as sales manager for Guinness Diageo Cameroon, and also a relationship manager at Financial House SA, a microfinance in Cameroon. Our CTO, Michael Hammond, has 3 years experience building, deploying, and maintaining enterprise software, and has worked with Vodafone Ghana. Together with my 3 years experience as Chief Operations Officer at Frikanda, the team is digitizing the whole process of the activities of informal retailers in Ghana. In other words, at Shopper, we are powering the next generation of informal retailers in Ghana and beyond. Thank you.
Thank you, Frank. Over to the judges.
Thank you, Frank. It's a great presentation. So can you describe to me briefly what your supply chain looks like? Where are you guys stocking from, and are you holding inventory?
All right, sure. So we've partnered with manufacturers and suppliers. So we don't have a warehouse, but we have a platform. What I mean by a platform is that we have a storage space where the manufacturers and suppliers keep the goods, because we are dealing in FMCG goods. It really moves really fast. So the suppliers keep the goods at our platform for a short time, and then we are able to distribute to the retailers when the order comes to our shopper platform.
And how are you interacting with the suppliers? Do you sell them enterprise software that they use to receive your orders? How is that working?
Okay, so currently what we are doing is that we've signed a partnership agreement with them, and then we have specific days that they deliver the goods to us. And also we are interacting with them via WhatsApp. We have a WhatsApp channel where we tell them this is the quantity of goods we want, and this is when we want it. So they deliver to our warehouse because they know our platform, because they know where our location and stuff like. So it's mostly as WhatsApp interaction. We are not focusing on the supplier side, since we want to focus more on the informal retail sector.
Got it.
So from the monetization, you said you add a 7% markup. Yeah. So is it a 7% markup to the selling? The question is, are you 7% more expensive to the shops who get from you?
Okay. So we are 8% less than how much they are currently buying a product. What I mean is that since we are taking goods from the manufacturers and suppliers directly, they've given it to us at a relatively discount price as compared to what the wholesalers are offering to the retailers. So because of that discount price, we have taken the goods from the suppliers. We are able to reduce our prices by reducing 8% of how much they are currently buying. Then we are focusing only on the 7%, so that we keep the 7% and we give the 8% back to the retailers. Does it answer your question?
Yeah. So if you don't buy, but you don't buy from the suppliers,
we
right?
Buy
so if you don't, you buy from them. Okay.
Yeah.
Okay, so you buy from them and then you sell it. I thought you meant you just gave it to you on consignment. So you buy from them, and then you sell to your small businesses.
Exactly, at a discount price.
Okay, so what is your view though? I mean, in FMCGs are very, very low margin businesses, right? So every extra discount you're given is, a further reduction in your own gross margins. You have your delivery costs that you obviously don't charge deliveries to the shops you supply to. So how do you think about profitability and margin growth with that type of sort of discount and cost structure?
Okay, so we understand that our business is more like a margins game, and we need to have a positive number. So because of that, we unlike we going to the suppliers to take the goods to incur extra logistic costs, the suppliers supply the goods to our warehouse, right? So we don't take care of logistics. The only logistics we take care of is the delivery to the final consumer. So we strike the number and realize that we are incurring 2% logistic cost when we move the goods from our platform to the retailer side. So since we don't incur logistic costs from the supplier side, we are able to cover our logistic and still have additional 5% as commission on our product. And also the retailers that we are targeting, the informal retailers, they are the corner shops. So usually they buy in bits, unlike the wholesalers and the bigger retailers that buy in bulk. So because they buy in bits, we are able to still make that 7% margin on our product, unlike if we sold in cartons and stuff like that. So that reduced our margin to 2 or 3%.
Hey, Frank, thank you for that. I had an interesting analysis. It seems your business is very asset light. I liked the idea that goods are actually delivered via tricycles. I thought that was quite cool. But I guess in delivering product via tricycles, A, it limits how much product can be done. And B, probably you have a small geographical area that you can provide your services currently to. Can you comment on, do you have any comments on what I said?
Yeah, of course. So since we are targeting the small shops, the very small shops whose orders ranges between 100 cedis to 300 cedis, our tricycles are able to load on average 25 orders at a go. So we are able to supply, for instance, we are heavily located around Ogbojo. So with our tricycle, we are able to deliver to over 50 retailers just in Ogbojo alone. And because we are dealing with 24-hour delivery, we are able to, aggregate the deliveries at various locations and also times as well. So we are able to ensure that all our customers have the product as and when they need it.
Cheers. Right. Thanks for that.
All right, let's put our hands together one more time for the 4 amazing ventures and for our panels of judges. All right, my name is Felix Darko. I've been your host, and I would like to hand over now to Chirag Shamdasani from the Mastercard Foundation. He's a program partner for digital economy. Please welcome Chirag.
I'm Chirag Shamdasani from the Mastercard Foundation, and I just want to say a quick couple things to wrap up what's been a really interesting event. First off, I really enjoyed the presentations by the companies and the judges' remarks. So So thank you so much for putting that together. I think what we've clearly seen, not only through the presentations today, but just the research that we've done, is that there's a lot of innovative solutions out there in the market that can help us achieve our target, right? Achieve our goal of building the financial resilience of informal sector MSEs. But more importantly, perhaps from the perspective of the companies that presented or the companies that will apply, there's a significant market opportunity, right? So Alex spoke about quadrupling his sales, and we hear all these ridiculous stats over and over about the size of the informal sector. So obviously the opportunity is there. I think what we are trying to do is to give it a little bit of a push, right? So how can we incentivize and support the realization of that opportunity, and hopefully do that in a manner that supports inclusive growth for the informal sector as well? Because I think because of the nascent stage at where the sector is at in Ghana, we have the opportunity to do that. So hopefully we can do that through this program. So I'm really, really excited that this program is officially kicked off. I'm looking forward to learning from the 6 companies that we work with and all the connections and the networks that we do build. So in line with that, I want to say a big thank you to everybody who's attending virtually, who's made it in person. And I hope to continue to count on your support and engagement to make this program a massive success. And lastly, the plug, we strongly encourage eligible companies to apply. Please share with your networks. The link, I believe, is bfa.work/EOI. Somebody will correct me in the chat if that's wrong. But thank you so much for attending, everyone, again. And thank you guys for organizing a brilliant event. Thanks.
Well, thank you so much, Chirag, for your closing remarks, and to everyone that's been a part of this event. We'd love to hear how you think about today's session. Please provide a quick rating on your screen. I'll just give you a few seconds. We want to wrap up and appreciate very much everyone staying through what's been a very dynamic and complete event. So thank you so much for being with us today. And while I let that run for a few more seconds, we really, as Chirag mentioned, and Matt, my colleague, would love to know about you if you're a digital commerce company along the value chain and directly serving informal MSEs, or your work reaches informal MSEs. So please do apply through our EOI form. And we look forward to hearing from you. You see the URL on the chat panel as well if you want that available to you. So we look forward to hearing from you and together accelerating an environment for companies and innovation to scale that will improve the livelihoods and resilience of informal micro and small enterprises. That's the focus of our program, and where we hope that digital commerce can accelerate the ecosystem. So thank you so much for also providing your responses. We look forward to seeing you in the future. Thanks, everyone. Goodbye.